Welcome to Market Day Report. Thank you for allowing us to be a part of your Thursday morning. Okay, we've got Ted Seifried standing by. We'll break down markets for you in just a moment. But first, where are we trading? Let's go to the futures markets, and the corn market is in the red, down 3/4 of a penny, 454 3/4. And when we talk the December contract, we're talking about the new crop. So what's either in the ground or going in the ground. Same for soybeans. The November contract, 1053 3/4. It's a penny and a half higher. Wheat market, starting with Chicago in July, off 5.5, 543 3/4. For hard red winter wheat, July, 537 1/4. It's off 3 1/4. And spring wheat, December, 632 1/2. It's down 3 1/4 cents. Cotton market still lower, down 43 on the new crop, 68.28. And to help us understand what's happening, we go to Chicago. Vice President Zaner Ag Hedge, Ted Seifried. All right, Ted, what are you watching here this morning?
Tony, I think the first thing is that we saw soybean oil under a tremendous amount of pressure overnight. And soybeans were down pretty good because of it. But now we're higher on the day. The July bean contract in particular, it's an outside reversal to higher day. You could get a little bit of a sort of a reassuring buy signal here in soybeans, depending on where we finish today. Obviously, we're very sensitive to what's going on in policy. The soybean oil contract has been all over the place on any sort of rumors or anything that we get. And the rumor going into last night was that an oil exec said that there's going to be a lot of SREs, the small refinery exemptions, that get put through very quickly once the bill is passed. Obviously, the soybean oil market didn't like that. But the bill going through the House, now moving to the Senate, does have some very good things longer term for soybean oil used for biodiesel. So it's kind of a mixed bag. Not exactly sure how this all ends up. In the near term, could be negative. Long term, should be positive. But like I said, it's an outside reversal higher day in soybeans at the moment. If we hold on to the strength or build on it, that could be a good thing on the chart. If we give it back, well, that's something else. Now, we've got so much going on from a macroeconomic standpoint. The stock market was down super hard yesterday, but kind of trying to fight its way back today. And then, seasonality of this whole thing. We're finishing up planting, and then we're getting into the growing season. We're looking at weather. But you wonder, Tony, how much seasonality really applies this year versus normal years. I would say this is not a normal year. It doesn't mean that seasonality can apply or cannot apply, but it doesn't necessarily mean that it has to. So I think we're all on the edge of our seats, kind of waiting for the next shoe to drop and trying to figure out where we're going from here. I don't like what we're seeing in the wheat today after the big move to the upside. We're giving a lot of that back, even with really fantastic export sales. So, yeah, head on a swivel, Tony. Stay tuned, buddy.
Well, and you mentioned the wheat market. We've seen a 3-day rally there with some double-digit gains along the way, and that followed what 6 sessions like the spring wheat contract was down 6 or 7 consecutive sessions. So kind of a reversal. Does that just tell us maybe we took it to the downside too far?
Well, Tony, we put our contract low in last Tuesday, right? So, I mean, yes, we've had a nice bounce. Technically, we're oversold. We pretty much went up to the first level of resistance. We got through it, but then we kind of ended up fading back and closed below it. Now we're drifting below it again. It's wheat, Tony. You'd like to say that there is a constructive chart formation happening here, that we could see a longer term bottom. You'd like to say that the fundamentals for wheat aren't getting more bearish. Yes, the crop had been improving, and we're looking at close to a billion bushel carryover for new crop. But I would say that we have maybe gotten a little bit too cheap. We saw very good export sales, almost 900,000 metric tons. That's impressive. So maybe we're adequately priced, to say the least, and could see a bit of a bounce. But I think a lot of that depends on what happens with row crops, corn in particular, what happens with weather for the rest of the winter wheat season and into the heart of the row crop growing season as well.
Well, let's take a break. When we come back, I can't wait to get your thoughts on the pork market, hog market, following pork's strong weekly export sales report. Market Day Report continues in a moment. Live cattle futures have been higher 4 consecutive sessions. Can they make it 5? Well, we're on our way as we look at the live cattle market and the June contract trading 95 higher at 215.10. 209.72 on the August. That's up $1.07. USDA's weekly export sales report 12,300 metric tons sold. That is down 16% week over week and 8% below a 4-week average. Actual shipments, what we send out, 14,800 metric tons, was positive on a week over week and a 4-week average run. Then we get over to the feeders before we get over to the hog market, which is what I'm kind of excited about talking about. May contract here for the feeders, 62 lower, 295.67. August 297.30. That's up 87. Okay, what's happening with the hogs? Hogs again have had a good run this year, up over 22%. Now the July contract at 102.40 is down 12. We're unchanged on August. Now a couple of pennies lower at 102.32. But USDA said export sales up 52% week over week, 68% above the 4-week average at 37,400 metric tons. The actual shipments over 28,000 metric tons. So Ted Seifried, Zaner Ag Hedge, is that bullish for the market?
Well, yeah, I'd say that a strong export sales week is always a friendly thing for a market. The really nice thing on that is that 7,800 metric tons of that was to China. So, you know, with that ongoing trade war, although it's cooled off, it's great to see China business in there, especially for pork. I've been saying for a while that pork might be the biggest beneficiary of this 90-day cool-off period because we are kind of out of the window for soybeans, even though old crop soybean export sales were actually pretty good. Anyways, China on the board there for pork export sales is friendly. We are, like you showed, pretty much unchanged in hogs here right now. I think we're taking just a little bit of a breather. I do think that we might have to go back down and fill that gap that we left on the chart. That's down at 99.30 in the August futures. Just because, charts don't like to leave gaps, technically speaking. But we've had a really, as you said, a great run since the beginning of April. I think there could be more upside potential longer term. I just do wonder if we're due for a bit of a pullback here at this point. Cattle, like you said, live cattle have been higher 4 sessions in a row, but we've barely taken back some of the losses from mid last week. So, I mean, it's kind of lackluster, and it's got to be a little bit disappointing if you want to be bullish cattle. Look, there's been bullish cattle fundamentals for a very long time. We've had a very long bull market in cattle, but bull markets are due for corrections from time to time, and you wonder if we're done with that quite here. And the feeder cattle market in particular kind of suggests to me that we might still have a little bit more room to the downside before all is said and done. And still watching the stock market equities, obviously that is one of the things that we use for a gauge on what we think domestic demand is going to be. I think there's some concern on that that's been popping up for the last couple of days too. So do keep an eye on that as well.
All right, Ted. Ted Seifried with Zaner Ag Hedge in Chicago.